Crowd's down 20% after hours. Earnings were not awful, but guidance was really bad for fourth quarter, and that is throwing the stock down into what we will just refer to as a free fall. You're just breaking down. I've got pre and post data in here, and you can see this really closely as to what's going on. At the time of recording this, we did not listen to the conference call yet. I try to get these out before then, but we always talk about we want to watch that first 15 minutes, and here we are. So we can see clearly what's happened there. Now that we can see those levels, we just really want to pay attention to them, right? And let's see how we act at that 113. There was if you're quick with these, I'll just give you an idea. If you're super quick and you have a wick like this, once you break that, you can actually scalp down on it. You can see how you never broke over that wick. Support becomes resistance. You put the trade on and you can scalp your way out of the trade. But what do you do now with it? You're going into the conference call. At this particular time, I think you need to see what happens with the conference call. Usually these tend to trade up into the conference call where people have hopes, and then we see how those hopes play themselves out later in the week. Now, there are several other names that seem to be moving here, and I really want to address some leaders. So this JP Morgan is something we have in the newsletter. There is a description below and a link in that description to get the newsletter. But you can see how we're flipping here, right? So this is pretty interesting action coming into the GDP tomorrow, coming into some really significant data tomorrow besides GDP. And then on top of that, we have Powell speaking. So there's a lot going on tomorrow. Powell speaks at 1:30. So we're seeing JP Morgan move up. Now, we're not really seeing XLF have the exact same move, right? That's not over that 3610 level, but JP Morgan is. Well, that means we have relative strength, and that means that that is the one that we should focus on, right? You just go through the list and you see which one is acting the strongest, and then you can determine who's got relative strength, and that tells you where you really want to put your money. So I find that fascinating, the way that this acted today. Complete reversal, and that's really what we're looking for. We're looking for those reversals. Now, there's a litany to go over, so I'm going to go through it pretty quickly, but keep watching these home builders, okay? This is what happens to them. They trade down. They get completely under book value. If you remember a couple months ago, we talked about this, how it was trading at pretty much trough levels of book value, and now you can see what we're doing and how we're popping up over. This is the second close over that 200-day. Let's just see how it goes here. But I'm watching this really closely, and you're seeing this divergence, and I just want to point that out. Some of the names out there that we went over, and we went over this one last night. That's why I always suggest that you subscribe to the channel, click all notifications. So at a minimum, you're scouring these ideas for later. But if you take a look at ENPH, this was yesterday was the first real close under that 5-day moving average. And we've been trading that technical lately. And all we did was just break that and roll right back down. So this having a test of that 55-day moving average, 287.48, would not be a shock to me to see something like that. So, we're going to watch and wait there. But there's some other really dynamic things going on out there right now. Workday we should probably cover, because what's happening there is it's actually being rewarded a little bit after hours. And let's just take a look at this so you can see the move and how we're doing. This is what's happening. At least we're seeing companies with good earnings being rewarded, and Workday seems to fit into that category right now. You never know how these conference calls are going to go. Never. And I strongly recommend that you get in the habit of listening to them, because the market's changed drastically, and technical analysis is not going to be enough unless you're just looking at being a day trader. If you are, then obviously you don't really care about the fundamentals and macro situation. But considering how things are changing, you're going to have to brush up on your skill set. So we have Workday that we need to watch tomorrow. We're not sure where that's going to play out yet. I will say this: the fact that this Manchester United had more volume today and actually broke above this level got my attention. So this is a doji. It's a long-legged doji. They are signs of uncertainty. We flipped it. Okay, it's unequivocal. I don't know if the company's being bought or not. I have no idea. All I can tell you is they put themselves up for sale. I wasn't very interested this day when you have these gap ups. I had my inside day, long-legged doji. There's my break. You try it and you see if it works. Now, caveat or disclosure, I have a position in this and I married puts to it so that my downside is limited. In case it does, they say we're not selling ourselves anymore or something along those lines. So I don't think that's going to be the case. I don't know who the suitor is going to be and if they're going to try and do a cash deal or a stock deal. The company might want to do a stock deal, right? So that, because that affects their tax basis and how much they're going to pay in taxes. So they might want to do a stock deal with somebody. If that's the case, you don't know that you're going to get that exact price because the other stock could drop, because this is not going to be an accretive merger, right? The merger will be dilutive. Dilutive mergers, the acquiring company usually drops in value because they're exchanging their cash for something that is, quote, dilutive. So we're going to keep this in mind. Now, I think that this is worth having on your radar. I really do. I'm also going to suggest some of the big ones. So we talked about this one again yesterday in Apple and how we were breaking down, and we broke over that 55 for the first time. And that's exactly what we did. This is not where you want to be. And you can see the crack here and then the follow through. So no matter what we were saying about this level up here, and we're playing this level really tight, it doesn't really matter. This is what happened. We rolled. So if you take a look at this, I can have all the aspirations in the world. I have to trade what's in front of me, right? I can't just hope that things get better. I have to trade what I'm looking at. And this is something that I would say raises a red flag to me when we're seeing this. And also these games that we saw today. So I'll show you a trade that I actually got caught in. This is something I showed in the trading room. We're forming a head and shoulders right in here, left shoulder, head, right shoulder. But this is something that absolutely got me today. When we were developing this right shoulder, and we don't know that at this time, all we have is this huge green bar. And when we have that huge green bar, I think it's helpful for me to talk about stocks that you actually lose money in, so that people understand that not everybody that trades makes 100% on every trade. So you actually understand that there's a methodology to it. You have to honor your stops. And if you take nothing else from tonight, please take that. Okay, as soon as you break that level, that was it. I was out. Okay, this is what it cost me, from 186 to 184.77. This should have gone. This is a 3-bar pattern coming out, ripping off a higher high of the open, right? We're taking that out. We've already taken the open out. We should have ran. Instead, all they did was pull a flim-flam, get people in and sweep the legs. And you can see, as soon as people realize that, that's where you get out immediately. And that was it. And then you just broke down and kind of went from there. I have a small put position on in this right now. I really want to see how GDP plays out before I go crazy with it. We did hold this 179 level. It's hard to tell you really where the neckline is because of this undercut. So I think you're better off using the 179 as the neckline. But you're going to really want to watch this. And I'm seeing some signs that I want to go over here so that we're all just aware of it tomorrow. Now, I don't know how GDP is going to come out any more than I knew how crowd was going to come out with earnings, right? If you're guessing, you're not investing. It's called guessing for a reason. But this is really interesting. This is LQD, and this is the investment grade corporate bond market. Now, what I like about this is you can see and you look for patterns. So you see this level right here, and that's August 11th. See that reversal bar right there? And you can see this reversal bar right here as well, right? Earlier on, and then we couldn't get over, and then we retest and the reversal, and then the break of that reversal, right? This is telling you that they are selling corporate bonds. Now, if you overlay this, and let me just put this in. Okay, so we're going to overlay this with the S&P. Now, see the red doji right here? And then now you break down. See how the stock market was still going up? This is the SPY. See how the SPY was still going up? And then it telegraphed when this finally cracked, but we already had signs of cracking here. We're seeing the same thing right now. And that's what I'm a little concerned about. So we're going to have to see how this plays out tomorrow. I don't know that it's going to be this easy. I'm just going to tell you that. I don't know that it's going to be so simple that the S&P is just going to very simply just respect this 200-day again, and the trade's going to be that easy. For right now, I'm going to have to say yes, it really does look that easy. If you watched Saturday's video, you remember we went through stocks and the percentages above the 50-day moving average and stated that it was about 90. So we are due for a pullback. That doesn't mean you're going to take out the lows again. It does mean that you could come down, backfill, and then go higher. We are seeing money flow into real corporations. Okay, we are seeing that. We did see money flow into JP Morgan. We are seeing money flow into names like BA, and we are seeing these flags, and they are setting up for the future. It just doesn't mean that it's going to happen in a day. Everybody have a great evening. Trade to win.